Good morning, America. Welcome to another great week here. Um, and thank you for watching Taxes Made Easy live or on rebroadcast. So today we're going to talk about estimated tax payments, and we're going to focus more on it. Why? Because the deadline is in a week. So I more and more people need to know about this. If you don't know about this, we've been talking about this on the show, but people get confused. It gets ignored because so much else is going on. The first quarter was due on April 15th. But again, with the tax deadline and getting your tax returns in, that's what everybody was focusing on. Second quarter for just 2 months for April, May is due June 15th, but June 15th falls on a Saturday, so it's due next Monday. We're going to take a deep dive into it. Who needs to pay these taxes? How do you pay them? And make sure that you're not going to get hit with another penalty by the IRS. So stay tuned. Welcome back. Thank you for watching Taxes Made Easy. We've got a lot of news to cover, but we're going to try to focus things a little bit more and talk more about the topic of the day. So first things first, the IRS has come out with some more relief for victims of storms in West Virginia. And again, this is all on irs.gov, but let me go ahead and share these articles. And they had some storms in West Virginia. If you were in Boone, Brook, Cabell, Fayette, Hancock, Kanawha, Lincoln, Marshall, Nicholas, Ohio, Preston, Putnam, Tyler, Wayne, and Wetzel counties. So quite a few counties affected by severe storms, winds, tornadoes, flooding, and mudslides. So pretty serious stuff here. And then there's another in Kentucky. So again, Kentucky had this storms, tornadoes, landslides, mudslides hit West Virginia and Kentucky. So if you have questions, they postponed the deadlines to November 1st for both of them. And if you are in those areas, look it up or call us and we can guide you through it. Talk to your CPA. There are deadlines to help with this. Pushing out some of these quarterly estimated tax payment deadlines will save you money as well. But usually have to write on there that this is for relief. So you can't just submit it and expect the IRS to do this for you. You have to bring it up and mention to them when you actually submit it. So next article, this is going to be a quick one. And again, this is interesting. I like to highlight these cases because people think of tax evasion, tax fraud. But what is tax evasion? What is tax fraud? And what is the line between it? So the facts are, the more likely it's going to be pushed into tax evasion. But I have plenty of clients owe millions of dollars, and it's not tax evasion, tax fraud. And I just want to highlight this because I can't tell you how many times people come into my office and their first question is, am I going to jail? In most cases, no. This guy is, but that's because he worked at it. So let's talk about these facts and kind of contrast them to someone that just didn't file their tax returns for years. Didn't pay the balances. They know they're behind, but now they're trying to do something about it. First of all, he got investigated. So he had federal charges stemming from tax evasion. So again, this is why you do want to get squared away. You do want to go, because if they start investigating you, you're going to be treated much differently than if you go and you start reporting and start getting being proactive about this. So Mr. Bruce Brochet is accused of evading more than taxes on more than $825,000 in business income. So how did he do it? Was it just an oopsie, or I had life happen to me, I just fell behind on filing my taxes? No, he actively deposited them into his personal account, and these are from his commercial clients. So he actively went and this is a silly thing. Do people take money from their business all the time? Yes, but he never deposited the money in his commercial or business account. So he just took the money and never reported it. That's all he did. but it came out to 219,000. So when you're depositing almost $1 million into your personal account, not reporting it, um, that's $1 million that you didn't pay taxes on. 219,000 in taxes with penalties and interest. That's going to go up quite a bit. So he's not going to end up paying 219. Now he's going to have a criminal conviction on his record. He's going to have all kinds of penalties, and trust me, it's much, much nastier when the IRS comes after you. So this is why, if you have questions, should I file my taxes? Should I get straight? The question is yes, absolutely. Are they going to go after someone that owes $30,000 to $40,000 with criminal penalties? Most likely not. And this is the exception. This case is the exception mainly because they investigated him. So if you just go to the press release from the U.S. Attorney's Office, he's already admitted, so he pled out. So going to the press release, he pled out, and again, it doesn't. So here we go. RSCI, so criminal investigated, invested this case, and then referred it for prosecution, and they're prosecuting the case. So he was investigating. They were looking into his case for quite some time. And the silly thing is, whenever you have deposits of more than $10,000, the IRS sees it. That's all reported to the government. So if you think you're going to hide money like that and not be able to have to report it, it's going to raise red flags. He did this for years. And so they investigated him, and then he pled guilty today, and then he pled guilty to it, and now he's got to deal with the consequences of it. So again, it's not worth it to play funny games with the IRS. And it just gets worse. The more you play with them, the more you try to hide. Anytime you're actively hiding assets from the government, not a smart idea. So an interesting article here. Moving forward, I'm going to pull that up. This is again about EVs. And I've been talking about this a lot, which is why I try to bring this up. Ironically, they have a $7.5 billion charging station. This is where they've built 7 charging stations for so far. After 3 years, over 745. So part of this program, part of this money is that they wanted to train people from minimum wage jobs through Goodwill of North Georgia. And the idea is transitioning people from low-wage jobs to EV jobs where they would hopefully have higher pay. And again, it serves two interests. First of all, that the government will have people trained to already do the work. And second of all, you're helping people become more educated, gain skills, and earn more wages. Sounds good, except for when the government's doing it, they usually completely miss the boat, because they don't know what they're doing when it comes to business. So out of 45 people that were trained, only 7 got jobs. Again, it talks about how this is designed to equip them with the skills necessary to install EV charging stations. So more than 2 years after Congress did this, you only have 7 EV charging stations. And so most of the people enrolled in this, they got the training, they spent the time doing this, and then there's no job. So the anticipated job market did not materialize as expected. People aren't buying electric vehicles like they used to. Again, they kind of saturated. The people that were going to buy them really have gone out there and purchased them for the most part, and now sales are dropping. And so, unfortunately, and so part of it is, again, expecting one thing, that there would be a lot more construction with EVs, but with the government only building 7, there's not a lot of work available. And private companies just aren't building EV charging stations. It's not profitable. And so when you're trying to force something that's not profitable, you spend a ton of government money doing it. And when they miss the mark here, so you have all these people that were trained, those skills aren't going to really transfer to elsewhere. Again, it's kind of a fairly narrow market, but if you train someone as an electrician where they could do electrical work and other things, they would learn a trade. That's an excellent trade to learn. People make a lot of money as electricians, but now they were just trained to help build EV stations. Now they're kind of left holding the bag. So moving on, this has been reported. So California, leading the charge, raised the minimum wage to $20 an hour, $25 for healthcare workers, but that got suspended because their own government can't afford it. Sorry. And it's estimated that around 9,500 jobs, almost 10,000 jobs have already been lost. So these people fired. This is businesses that are just closing the doors altogether. And even In-N-Out, amazing place. Everybody loves In-N-Out. It's very, very busy. Having to raise prices just because the costs are too much. And In-N-Out always prided themselves on having higher than average wages. And if you ever go to an In-N-Out, it's amazing. Those kids work. And so I'm more than happy to patronize In-N-Out locations. They work and they work hard, and they pump out a great product. Again, they have a limited menu, but it's good food for fast food. I think it's one of the best places out there. Reviews California's Grill is closing 48 of its 134 sites, which is, and there's plenty of other businesses closing down. When you raise costs, you can't just say, oh, let's just pay people without having massive effects throughout the government or throughout the economy. And so going with that, this is an older article actually from The Hill from January of 2021. But this is key. People aren't thinking about this. The Biden administration early on tried to push for $15 an hour minimum wage across the entire country. Now the concerns are that they would do it all again. If they win the election, and especially if they win the House back, they very well could push for this $15 an hour minimum wage. Now it's not $20 like California, but when you raise minimum wage across the board, you lose jobs. It causes net job loss. So, so the minimum wage currently is $7.25 an hour. It would double it to $15 an hour. Should it go up some? Maybe, but the problem is every time the government gets in there and forces change, guess what happens? People lose jobs. It's just the government. I'm not saying the government shouldn't be involved at all, but going in and just doubling it, and just picking a number out of a hat of $15 an hour, really does hurt people. So, again, the holler from the IFA, International Franchise Association, really points out that when you double the minimum wage, it will be more harmful to people intended to help, and where the cost of living harmful to the people it's intended to help in places where the cost of living is lower. But while it might make sense in cities like New York or San Francisco, it will kill businesses elsewhere throughout the country. So one of the things would phase out the tip minimum wage for restaurant service workers. So you have competing proposals here between minimum wage and on the left, they want to get rid of the minimum wage where places where there's a lot of tips. Businesses can save money by paying less in W-2 wages and then the employees get a lot more in tips. So they go and they work there for the tips. I have a couple sons that went and they were working at places where there were tips, making tons of money. People make a lot more in tips than what the business pays them. And they're usually very happy with it. I talked to a server the other day at a local restaurant. It seemed like one of the better servers, but he was making $90,000 a year waiting tables. Good for him. I mean, he works hard. He works a lot of hours, but he's a young guy and he's killing it. Just waiting tables, and he's saving money. He can pay for college. He can do what he wants to when he decides to change careers and go a different direction. But he's making good money as a single guy. So interesting article here. Actually, I lost it. But I'm well into our break, so I'm going to have to come back. Sorry for that short break. I went over talking about um, earlier in the Biden administration, they were pushing for a 15 minimum wage and the impact that's going to happen. Part of that is that they were trying to get rid of a minimum wage, a lower minimum wage for people earning tips. And the opposite proposal is yesterday. So over the weekend, Donald Trump went and held, so this happened on June 9th, yesterday. And this is in quite a few different news articles. This one's New York Post. And he promised to give a tip tax break. So what is he proposing? Is that they're going to get rid, let me share this tab. They're going to get rid of charging taxes on tips. Currently, the IRS considers that taxable income, and people make a lot of money on tips. But the concern is, and what makes it harder, it didn't used to be taxed. The IRS changed their policies where now they're going after tips. But this is really going after, the people making tips are not the wealthy. These are usually young people working hard at restaurants, golf courses, elsewhere, where it's very easy to take those tips and not report them. But most businesses, they have to be reported, they have to be accounted for, and a lot of people look at this and why are they paying taxes on tips when it's based on service, and it can get frustrating. And again, there's a culture where people are asking for tips on everything lately. You go into a fast food place and they don't provide you service; they just hand you your food, and they want a tip. Anyway, whether or not you give a tip for that, that's up to you. But in Las Vegas, they have a minimum wage for tipped employees. They're talking about increasing it to $4.35 an hour, but that's still minimum wage is $9.50 an hour. So they have to make sure they're making at least $9.50 an hour. But usually with tips, they're making well above that in most industries. And so just two different policies, two different directions. taxing tips, which I think more than anything else affect the poor in society, or leaving that available, giving them more money in their pocket. So I don't think the U.S. government's going to hurt too much by not taxing the tips of people in service industries. So going with that, more and more corporations are working on leaning on freelancers. So 92% of all companies expect to work with freelancers in 2024, and instead of hiring people. Why are they not hiring people? Why is it more attractive to work with freelancers? It's because it's expensive to have employees on payroll. You have to provide benefits, you have to train them. Whereas if you're working for a freelancer, they should already be an expert in what they're doing, so you don't have to train them to do this. And they say right here that share of gig workers hit a new all-time high in March. And so when you're working with freelancers, you want to focus on make sure that they have their own little business and they're working for multiple employers, and it's more project based. What you don't want is to treat someone like a freelancer or 1099 employee. If they are working for you full time, they're not working for other businesses. States across the country are adopting California's rules, trying to force everybody into a W-2 position instead of 1099. And it is killing businesses, is really hurting businesses and putting them at an unfair advantage. And the Biden administration is pushing the same kinds of rules. They haven't been able to get them through yet. But in principle, the W-2 or 1099 employees are disfavored. So if someone is 1099, if you're working as a freelancer, or if you're self-employed, those are the main people hit by estimated tax payments. So that's really what we're going to focus on today, is underpayment of estimated tax payments by individuals. Now I want to be careful here, and I'm going to jump back to that article with the IRS, but a little more. Investopedia has a great article here. Tax underpayment penalty. What is it? Examples and how to avoid one. It is not just the self-employed that have to worry about this and worry about paying estimated tax payments. Next deadline again is June 17th, 1 week away. So by the time you're watching this, if you're not watching this live, the deadline's going to be right on you. So I was talking at a law firm, and one of the partners for the law firm, he was a newer partner, but he was like, "What are you talking about? June 17th deadline? What is that?" I said, "Well, estimated tax payments. Welcome to the, he got promoted to partner. Now he gets a K1. Now he has to pay estimated tax payments." And again, there's many people getting K1s, but also if you are under withholding on your taxes. So a lot of people, they need more money in the moment, so they under withheld. You're going to get hit with this fine too. So when are you hit with this underpayment penalty? It's when you don't pay enough in the estimated taxes, or you don't have enough withheld from your wages during the year, or pay late. So if you're playing with your withholdings, you're going to pay more for that. A lot of people do that and they think, oh, I can just pay at the end of the year. You're going to get hit with the interest penalty, which currently is 8% is what the IRS is charging. And a lot of people are hoping that interest rates will go down. Don't hold your breath. A lot of people are pushing for the Fed to reduce interest rates. It's very possible they'll go up, not down. So again, a lot of people be cautious, be more conservative. Pay what you can in now to avoid these extra penalties. So how do you avoid getting hit with this penalty? So you have to pay at least 90% during the previous year to avoid an underpayment penalty. So 90% of your previous taxes, but that depends on what your income is. So if you pay late, you have an additional fine. If you don't pay throughout the tax year, then you get fined and you have to pay. And when it says quarterly, I pulled it up an Intuit article on this, and it says it's quarterly. Quarterlies, the IRS does it in a funky way. It is not every quarter. It's not every 3 months. So the first quarter covers January, February, March. So, those 3 months. And the payment deadline is, guess what? April 15th. So people are thinking, wait, April 15th is when I was paying my 23 taxes. To avoid this penalty, this is an additional penalty on top of all the other penalties you can get hit with of 8%. You should be paying throughout the current tax year to avoid these penalties. Taxes are due throughout the year. They're not due April 15th of the next year. And I ask people all the time, when are your taxes due? And they say, oh, April 15th. No, they're not. That's what many people have been getting away with, because with very low interest rates, the penalty was very low. Congress, in their great wisdom, sarcasm alert, jacked that up to the 8%, which is the interest rate out there. And that happened November of 23. So a lot of people are going to get surprised, which is one of the reasons I'm talking about it so much, to try to warn people and help inform them and educate them to go ahead and get this taken care of. So, the total failure to pay penalty is amount owed plus 5% of the underpayment amount, and it's capped at 25%. But again, these interest rates are set quarterly. If interest rates continue to go up or the economy does not improve, expect that number to continue to go up. So for employees, and this is talking about W-2, just make sure you're having sufficient taxes withheld on your W-4 form. It's very important that this is done, or you can get hit with the same penalty. It's not just self-employed. So it's my son saying goodbye to me.
Goodbye.
He's leaving for the day. So if you're self-employed, if you are one of these gig workers or a business owner, you need to file quarterly taxes. Quarterly taxes, and you need to pay the estimated taxes due. So a lot of people, and this is what's confusing, a lot of people are paid a wage. They're supposed to be paid a normal wage for their position. So they might be getting a W-2 income. And this is what I want to dive into, because this is where I'm seeing a lot of confusion among business owners, is that you have to not just look at what you're being paid, or if you're being paid a salary. That's typical. You're being paid a salary. It's going through W-2, that you're getting a regular paycheck with taxes withheld. That's only the first part of the picture. Second part of the picture is net profit. So when you do your tax return at the end of the year, if you own your own business, if you're freelancing, if you're doing side work, you're taxed on not what you take out of the business. You can take out more and not get taxed on that, but you're taxed on the net profit, what your business has earned throughout the year. So this is why it's so important that when you file your taxes, you have all of your expenses. Because if you don't include all of your legitimate expenses on there, then you're getting taxed on income that you didn't actually earn for your business. And this is, so if you have a lot of net profit, but you had to build up, you had a lot of expenses, you invested, or if you paid down loans, that's all considered net profit. So this is why I'm highly suggesting and pushing pretty hard that you sitting down with your CPA once a year is insufficient. It's not good enough. And I'm telling this directly to CPAs, and most of them are going, oh, well, I guess we should do that. It's like, well, with these new changes and as high as interest rates are, it helps you as business owners. If you have a small side gig, whatever, you should be sitting down, at least looking at your profit and loss statement every quarter. You should be using that profit and loss statement to determine how much you should be paying in estimated taxes. So you need to file the quarterly return. Let the IRS know how much it should be done. Well, it's not a quarterly return. You need to file quarterly returns if you're a business owners, if you have a payroll or anything like that. But you have to pay the estimated taxes due for the period. So right now we're in the second. We just finished the second quarter as of June 1st. It's only 2 quarters, April and May. Payments due by June 15th, but it falls on a Saturday, so you'll have until Monday, which means you need to be pulling your profit and loss statement, looking at it, and making some kind of payment. If you're not sure, this is where this next part of the article really kind of talks about the difference. They have a nice little chart down here. Where did it go? Actually, there's 2 different categories. If your AGI, adjusted gross income, is less than $150,000, then it's based on 90% of the current year taxes. Or, and this is an OR test, if you go off of 90% of the current year's taxes, or 100% of last year's taxes, you'll be fine. You won't get hit with this underpayment penalty. So if you look at your AGI for the current year, and you're kind of guesstimating, if you pay in at least 90%, you can pay the last 10% when you go off of it. Or you say, okay, I owed $20,000 last year, 100% this year. I'm gonna pay, if I owe $20,000 last year, as long as I pay $20,000 for the current year, I'll be fine. If your income goes up, you should be looking at that and seeing that throughout the year and making estimated tax payments based on that to make sure that you don't have a tax bill at the end of the year that you can't afford. Remember, when you pay by April 15th, if you just try to pay for that, that's when the first quarter estimated tax payments are also due. So try not to have a big tax balance at the end of the year. Now, if your AGI exceeds $150,000, the numbers go up. So again, it's 90% of the tax due for the current year, which means you need to be looking at your profit and loss regularly so that you know what you're going to owe. You know what your net profit is going to be off your profit and loss statement. It's not what you took out of the business. It's based on net profit for the year. Or 100% of the tax, 110% of the tax on the prior year. So if it's 110%, and these are for people making more than $150,000, this is a safe harbor. If you do 110% of the prior year taxable income, you might be paying more than you need to. So how do you know what you should actually be paying? By having your books in order, having your bookkeeping done. There are programs that for smaller companies, they do it automatically. They just pull the information from your bank. You have to go through it, organize it, or you have a bookkeeper that can do it very quickly and easily for you. You just have to make sure that they're on top of things and there's help out there. So if you have self-employment income, this is a very important thing. Don't forget that you also have to pay 14.9% for Social Security and Medicare taxes. So again, it's just not income tax they have to worry about. Social Security, Medicare, another 14.9% on top of whatever income tax that you're paying. So this is why if you have questions, I highly recommend you sit down with the CPA and talk about how to make sure that you're not going to get surprised by this. So again, we're going to continue going through this article, but I've talked at length about this, about how this can help you as business owners. And I keep saying it, look at your profit and loss, have this information together. A lot of people look at me like, you're crazy, we're not doing this. And I was like, I know you're not doing this. But this is how you become better business owners. This is how you manage your business better, is by getting a better grasp of what's happening, of your income, And when you understand what's happening with your personal finances, you can plan better, you can budget, you can decrease your taxes based on what's actually happening. So a lot of people, especially people that get large sums, realtors are very classic industry that has a lot of problems. Um, just send us the money, or send the IRS the money when you get big payments, big checks. So you should already have that number from your accountant. You should have that percentage. When it comes in, it should be easy. I know I get this payment. I know I'm just cutting so much to the IRS. And that way you can stay on top of it and avoid a lot of tax issues. Um, so you should be friends with your CPA or bookkeeper. You should be in regular contact with them throughout the year. Long gone are the days where you should just, people just take a shoebox with tons of receipts and then go drop it on your bookkeeper's desk. Now people say, look, I don't have all my information. We never have it together in time for April 15th. So we always file out and do an extension to October. That's fine. You can do the extension. But by having your numbers together, you'll be able to file well before the October 15th deadline, and you'll have better information. So we're going to take a quick break and come back to this in just a second. Welcome back, everybody, for the final session. And there's a lot here in this article. I'm just going to kind of go through it and break it down. Um, Interest rates payments are going to continue. Let me just close out. There we go. And it gets determined every quarter. So again, this is where paying attention to the federal interest rate, what's happening, can absolutely help you. Currently, 8% for individuals, 7% for large corporate underpayments. They did not change it for the second quarter, so it's still the same percentage rate, and it's based off the Fed. As long as the Fed doesn't move the rates, the federal rates are going to stay the same. So again, this is a simple thing. If you owe $5,000 in taxes, just an example, but only paid $2,000, you'd have to pay 8% of $300, which comes out to $240. Doesn't sound like that much, but this is additional tax on top of everything else. If you pay it by April 15th, you're only going to get hit with the $240. But if these numbers go up, and if you owed $10,000, you're adding $800. You have an $800 penalty. So again, it can definitely add up, and it's almost 8% is almost 10% of it. Again, if you owe $10,000, that's almost another $1,000 if you add interest and penalties on top of that. If you can't pay it, it's going to surprise a lot of people this next year. And this is, again, why we're trying to get the information out. How to avoid it? If you don't make enough and you show that you're going to owe less than $1,000 on your tax return, they're not going to assess it. If you paid 90% or more of the tax for the current taxable year, or 100% for the prior year, if you're over 150,000, it goes up to 110%, and it's whichever amount is less. So if it comes out that you file your tax returns and your income went down, as long as you paid 90% of the tax, you should be fine. If your income is going up, you should at least pay 100% or 110% if your AGI is over 150,000 on that. So underpayment penalty may also be waived for several other reasons. So these are some reasons to avoid it altogether. If you didn't owe any taxes for the preceding tax year, if you were a U.S. citizen or resident and last year you didn't owe any taxes. If you missed a required payment because of a casualty event, disaster, or other unusual circumstance. So one of the things we talked about in the beginning of the show was what happened in West Virginia and Kentucky. They had some severe storms, tornadoes, flooding, mudslides as a result, and the IRS makes those adjustments. So make sure whenever there's an adjustment made that you're still meeting those deadlines. So you can, this is interesting that they bring this out. The underpayment was a result of a reasonable cause and not willful neglect. So it says it may be waived. This is not an easy process here. So it is always easier to avoid the penalty in the first place, because getting these penalties waived is easier said than done. If you retired at age 62, and if you became disabled in the tax year for which they were made. So to get these waived, and I just want to be very clear what they're talking about here, there are two types of penalty abatements. The first one is if you didn't have any taxes or penalties for the prior 3 years, then you can go and ask for what's called a first-time penalty abatement. But anytime you see reasonable cause here, as far as getting any penalty waived, it's called an 843 abatement. Do not think this is easy to get. You might qualify for it, but it takes the IRS 12 to 18 months. You have to put together a package to go with the 843, the actual form. You have to send substantiation in. You have to follow up with it. And like I said, it takes them forever to actually get to it and consider it. And there's many times that they just reject it out of hand. We have to appeal it. This is a fight to try to get the penalties waived. So if at all possible, if you can pay throughout the year, Just do that. That's going to save you so much headache, so much grief, rather than trying to do an 843 penalty abatement. And again, we do them on a regular basis. We've gotten hundreds of thousands released through doing penalty abatements. It is not an easy task, though, and you're going to pay an attorney or other tax professional some a decent amount of money to get that done, because it is a huge pain. So special considerations: if you're seasonal and you get huge portions of your income later in the calendar year, this is why it's important to look at your profit and loss quarterly. What did I do? Or base it off of the previous year. Again, you have to apply for it. There's instructions on this, from this link for Form 2210. Now, one of the things I want to mention here, that this doesn't just apply to, and I said this before, it doesn't just apply to business owners. If you have something that triggers capital gains tax, if you have large income, you sell a property, you cash out some investments, there's plenty of things that can cause your tax balance to go up substantially in a given year. When you get those, the very first thing you should do is go talk to your CPA or your CPA or tax preparer. Say, look, I just got this chunk of money. How much should I pay in taxes? So this is a story from Shaquille O'Neal, and his very first paycheck was $1 million, and he went out and blew it all. And he was talking about this to someone who he got this $1 million paycheck. He went and bought himself a really nice car because now he had the money, and he drove it home. And his dad said, "Well, where's mine?" He said, "Okay," and he went and bought his dad a new car too. And then his mom said, "Well, where's mine? Don't leave me out." So he went and bought his mom a new car too. Very soon, that $1 million was gone. He said he blew it in a day, and then he owed taxes on it. So all of a sudden, he was in the hole. But thank goodness he was smart enough to listen to people that gave him good advice, saw what he did, and said, "Hey, you can't do that. Don't end up like all these other people that get a lot of money very quickly, blow it, and then they lose it all, and then they're filing for bankruptcy." Most professional sports players file for bankruptcy within 5 years after retiring. Either they have to retire or quit, or they get too old, and most of them don't manage their money well at all. They don't teach that. So Shaquille O'Neal is doing very well for himself, has all kinds of franchises, and is worth a lot of money right now because he listened to good advice, which shows that's the true intelligence is to listen to good advice. But again, you get any big items like that, you get any big chunks of money, first thing you should do, go talk to your tax preparer, make sure those taxes are paid. So for 2023, it was 7% for most underpayments, 9% for corporate. Safe harbor rules: if you owe less than $1,000 in taxes, if your total tax bill is less than $1,000, can you make them all at once? Yes, you can, and avoid it. If you pay that in the beginning of the year, why do that though? You're just hurting yourself. But if you have a large chunk of money, you can do this. This I want to highlight. So you can't pay it all at once unless do so at the beginning of the year. You can pay monthly in advance if that suits your budget better. And I want to take some time and talk about this. Almost every CPA will tell you only pay taxes when you have to. But this gets down to, do you have the discipline? And if you don't, paying 8% in a penalty is worse than any interest rate you're going to get from a bank. So if you have your money invested and you're making more than 8%, okay, it might make sense not to pay the IRS, but if you owe taxes at the end of the year and additional penalties are added to it, absolutely not worth it. So it makes sense that if it works better for you, and I tell people this all the time, Pay monthly if it works for you. Yeah, you might lose a small percentage. You might get 2% interest from your bank account. If you have it in the money market, it might be 4%. But it's not worth getting hit that 8% if you don't pay your estimated tax payments timely. So figure out what works best for you. 4% or 2% over a month isn't that much unless you're dealing with some really large numbers. But then you should have have people helping you out managing your finances and to take better advantage of that. But in most cases, especially for people that are self-employed, you get or self-employed, or if you have more income coming in other sources, or if you are working in a company where you're salaried but also get a K-1, pay those numbers monthly if you can. Make sure you're getting that estimated taxes payments in monthly, which means, yes, you have to look at your budget monthly. You have to look at what your income was, your expenses. You can usually do that fairly easily. And it just helps you be on top of things. Quarterly payments tend to surprise people. Oh, I have to pay this, unless they're preparing for it. If you do it monthly, it just goes with your monthly bills. It can make things a lot easier, and you're chunking it up in a smaller bit. So if you, at the end of the quarter, if you owe a little bit more, that's fine. You already have 2 months paid in. So this is a recommendation I give to people all the time. Pay monthly if you can. If it works better for you, if you have it down paying quarterly tax payments, more power to you, go with that. But if monthly works better for you, absolutely do it. So bottom line, if you don't pay enough in taxes, you can get hit with this underpayment penalty. Again, it's higher than ever this year. You can talk to your taxpayer today, but it is definitely it's not worth trying to get the penalties back. It's going to be years before you actually get it back or get it reduced through the abatement process. So if you have questions, give us a call, 520-485-7371. I did a deep dive on estimated tax payments today because it is important. This is good. Like I said, it's going to lead to more business for me, but I'm trying to help people from owing that, getting surprised and having this extra amount tacked on. And the number of people that I run into that just don't know about this is pretty big. So when is the tax deadline for the second quarter? June 17th. If you want to write this down, and you can look it up. What are the deadlines for the quarters? The next quarter is 3 months long. So June, July, August, and the deadline is September 15th, unless it falls on a weekend. I don't think it does. And then the last quarter is 4 months long. So September, October, November, December, and the payment is January 15th. So every 3 months throughout the year, January 15th, January 15th for the fourth quarter, and then you go right back into the cycle. April 15th, June 15th, September 15th, January 15th. So that should be logged. You should have that on your calendar to remind you. That way, and you should be prepared for it so it's not surprising you or kicking you in the teeth as it comes around. If you're just now starting, what should you do? Pay what you can now by June 17th. If you can't pay the whole amount, that's fine. Pay what you can. And whatever you pay in by the deadline, that's that much less that you'll get penalized for. And then catch up as best you can on the current quarter and then move backwards. So one big caveat here. If you take anything away from this, when you make estimated tax payments, make sure they're being designated to the correct quarter and year. So when you pay online, you have to choose which quarter, which year. If you do not choose and you just give the IRS money, the IRS will send it to the oldest tax year. If you have any tax balances, it might not get applied to the tax year at all. But save your receipts. If you pay online, you'll get a digital receipt. If you pay by personal check, which I recommend, cashiers, money checks, there's no paper trail. They lose it, you're out of your money. But if you send a check in the memo line, write first quarter, second quarter, ETP for 2024. And when you get a copy of that check, if they misapply it, all you have to do is send them the check and say, hey, you messed up. I put it on there. Or you can walk in a payment and get it designated exactly where that payment's supposed to go. You can walk into a local IRS office, mail in a payment, or you can pay online. Just key takeaway, we've seen too many people do this. Make sure you designate where that payment is to go to. So again, if you have questions, give us a call, 520-485-7371. You can go to our website, Guardian Tax Law, and all these shows are being posted to YouTube. So if you have any questions, get good information, find out, and really the whole goal of this show is to help educate people and avoid tax issues. And we want to make taxes easy for you so that you understand what your responsibilities are and how to pay Uncle Sam less legally. So again, have a great day, and again, if you have any questions, call and get more informed. You should be in the driver's seat, not chasing your tax responsibilities or feeling like you're flailing here. That's our whole goal here, is to help people get that peace of mind and feel in control of their life and their taxes.